New weekly outlook and the first one for the year of 2025. We're going to start off with some macro fundamentals, move on to the economic calendar for this week, and then finally move over to the technical side and take a look at what kind of opportunities we have for this week. We're going to start off with first what's happening with China, the tariffs, the Fed, and some of the things that are moving the Asian markets and their impact on the global economy in general. As we continue down here in this article, the very first one that we're going to start off with is going to be with China's stimulus. Essentially, what's going on here is that investors are watching closely for more government support in China to boost the economy. If Beijing announces new plans to stimulate their domestic spending, then it is essentially going to give a good lift to Chinese stocks, equities, markets in Asia, especially those that are tied to China. However, there's still a lot of concerns around how strong China's recovery will be. This is important because China's markets, financial markets, economy, and the strength usually tends to have a lot of spillover effects on the other Asian markets as well. So why do we care about this? Because if the trade war starts to heat up, then it could hurt the Asian currencies like the Chinese yuan, you're looking at the Korean won, and also the Japanese yen, because the tariffs, which have been announced a lot by Trump, they're going to make it harder for countries to trade with the US, and that means that there can be a stronger US dollar. Asian stock markets also might struggle if the tariffs end up hurting the companies, especially those making tech products or renewable energy. However, there are some countries still in Asia, like India or other parts of Southeast Asia, that could benefit because these companies will move production away from China and into these Southeast Asian countries. So now what traders are looking into, the type of sentiment is that, are they potentially going to sell the Asian stocks if they expect that there's going to be higher tariffs, while those investing in the regions outside of China are still going to see opportunities? If China introduces measures like cash handouts, subsidies to boost their economy, it's going to strengthen their currency temporarily as investors are going to be more confident in China's recovery, but they're still going to monitor the Chinese government announcements closely and see if they can buy the Chinese stocks if new stimulus measures are strong, but they're still going to be quite careful and cautious of any sort of weak economic signals. When you're looking on the equity side again, for the Asian market, the stocks in China and other Asian markets are still tied to China and could see rise if the government provides support to help consumers and businesses. But again, the main thing here is how strong will China's economic recovery be. That ties in with the US tariff side. As I said, Trump has announced already multiple times the tariffs that he's planning on implementing on a lot of these economies, especially China. So we know that the US-China trade war has been one of the major effects on the global economies, but there's a lot of uncertainty around his trade policies, Trump's trade policies, especially the potential tariffs on China and other countries, and that could hurt Asian companies by increasing cost and disrupting the overall supply chains. Especially sectors like renewable energy and chip making, they're going to be the most affected. But again, like I said, markets in India and Southeast Asia could benefit as these companies start to move away from production in China and move into these other countries. The US, as it pushes more tariffs on China and other countries, it's going to make the dollar more stronger, but also hurt the Asian currency. So when you're looking at the yen, when you're looking at the Korean won or any other Asian currencies that you're trading, that's the impact that's going to happen here. So that's what this part here is saying. When you're looking at equities, once again, sectors like the Asian tech or automakers, they're going to face a slowdown in sales, especially if they're relying on exports to the US. And countries, Southeast Asia countries, they're going to see more investments as businesses start to move away from China. And so that's why the traders and investors, they're monitoring a lot of what is happening with the US-China trade war, what is happening with the Chinese economy, and they're also keeping an eye on the US dollar movement and eventually, choose to invest in regions or companies that are not affected by the tariffs and move to safer assets like the US dollar, the world reserve currency. That brings us down to the interest rate path, which now we're going to start talking about the Fed. And I do want to dive a little bit deeper into that into the next article. Essentially, what's happening here is that the Federal Reserve is being more cautious about lowering their interest rates. So we saw that at the last meeting. They've pretty much maintained they didn't drop down too significantly or anything like that. And they have hinted at the fact that there's going to be a slowdown happening there. And so when they're being more cautious about lowering their interest rates, that's leading into a potential boost of the US dollar early this year. And this is going to weaken the Asian currencies and hurt the stock prices in Asia. However, what we might see as the year progresses, as we start to see more data coming out from the Fed, is that can we potentially see the dollar weakening? And if that happens, then we're expecting more investment going into Asia. So higher US interest rates, they're going to continue boosting the dollar in the short term, making the Asian currencies weaker. And a strong dollar is also going to put pressure on the stock markets in Asia because it makes the goods from those countries more expensive for consumers and buyers in the US. So in the short term, what we're going to see is that investors may potentially avoid the Asian stocks if they think that the dollar is going to stay strong, and the US interest rates will continue maintaining at the level that we're sitting at. And in the long term, if the dollar weakens, then we can see that there's going to be more investment into the Asian markets. So we're going to start to see strength more on the Asian currency side and the equity side. Continuing down with Bank of Japan, what we're starting to see is the expectations being pushed out to March of any potential rate hikes. And Bank of Japan has been delaying in increasing their interest rates, which what we have been seeing the effect is a weaker yen, which opposite of what we have been seeing with weaker markets. With a weaker yen, that's actually benefiting the Japanese exporters like the tech companies. And any changes in those Bank of Japan's policies will also affect the broader Asian markets, as Japanese investors tend to be the bigger buyers of foreign assets. So a weaker yen, because of this delay in raising interest rates by Bank of Japan, could potentially boost Japan's exporters, making their goods cheaper abroad, and that can lead into the yen continue to be weak, which impacts the traders that were traders like ourselves who are looking to sell the yen when you're comparing it to the US dollar, or when you're trading it to GBP or euro or any other currencies. Essentially what we're doing is starting to see a weaker yen happening there as well. On the equity side, the Japanese companies that export tech products or cars like Toyota or Sony, they're benefiting from a weaker yen because their products are becoming more affordable in the global markets. So as traders, as investors, what we're doing is betting on the Japanese exporters if the yen remains weak and avoiding the yen for the short term. The final part of this article is South Korea's crisis. There is a political uncertainty that's going on with the potential for a leadership change, and that can further drag down South Korea's stocks, which have already struggled. And now investors, they're just watching how this political crisis is unfolding and impacting the economy. But the main thing here was, again, Bank of Japan, the Fed, US interest rates, and then also the tariffs and the US-China trade war. I do want to dive a little bit deeper into the Fed part. So what we start to see is that the Fed reserves fall below the 3 trillion mark, which is the lowest that it has been since October 2020. When you continue down into this article, you get a better sense of what the Fed has been doing, but a quick summary is that the Fed is reducing the extra money that was added to the financial system during the pandemic, so back in 2020, and the efforts are being made to combat inflation, because if there's too much money in the financial system, that also leads to higher inflation. So that's one of the issues that the Fed is currently combating, and they need to be careful in this entire process, because if they remove the money too quickly from the system, then it's going to lead to instability in the markets and even higher cost of borrowing. So when you're maintaining those interest rates, that's what we're doing at the moment, kind of trying to combat inflation, but also not drop interest rates too fast or increase them again. We definitely want to avoid increasing them again, especially as we have been dropping them. The major thing that we know for the US in the coming weeks is going to be Trump taking office. And there are a few things that this article, in a very short, brief manner, goes over. And so some of the things I do want to highlight as you go through, this article is the first one is a potential market volatility that we're going to see with the government shutdown, the debt ceiling. So one of the key elements of this bill involves raising or eliminating the US debt ceiling. What is a US debt ceiling? So a debt ceiling for any economy is a limit on how much money the government can borrow. If the debt ceiling isn't raised, then the government could risk defaulting on its obligations, which causes market volatility and uncertainty in the stock market, in the foreign exchange market, for the currency, etc. We have seen this quite a few times already, as we have been trading for the past, few years together, where every year almost they're talking about a potential shutdown and things like that, and the volatility that follows in the market. So now the traders and investors, they usually watch closely whether this bill can pass and whether it includes a solution for the debt ceiling issue. If the bill gets delayed or it doesn't pass, then there's a risk of a government shutdown, which can harm the market sentiment and cause a lot more volatility in the equities and the bond market, especially in the US. The next thing is, what's the impact here on the US dollar? Why do we care as investors? Because if the bill includes major tax cuts and deregulation, which we are expecting, then it could boost economic growth in the short term. So this might make the US dollar stronger because investors could become more optimistic about the US economy, but the US debt ceiling issue can also hurt the confidence in the dollar if it's not resolved smoothly. So this is what we're going to be watching for as investors, as traders, of what is potentially going to happen with this bill. And then the next thing, as you continue down here, is going to be them talking about tax cuts and corporate stocks. So the extension of Trump's 2017 tax cuts, it's going to expire soon, but is likely to benefit corporations and investors, as lower taxes mean that there's higher profits for the companies. And this is going to boost the US stocks in sectors like technology, financials, and consumer goods, which could rise in anticipation of a more favorable tax condition as well. Then you also have the issue of the border security and immigration. So they hint at that, in the beginning of this article, and then more as you continue down as well, where border security and immigration policies could impact industries that rely on immigration for labor, when you're looking at agriculture, when you're looking at construction. And if the bill includes funding for mass deportation or stricter immigration laws, then these certain sectors may face labor shortages, which could also impact the stock prices in those industries. So there's a lot of political uncertainty. There's a lot of disagreements, as always, between Republicans and the Democrats. And there's a lot of disagreements between Republicans about how to structure this bill. So there is one part where you can do one big bill, or you can do multiple smaller ones. And that also creates a lot of uncertainty and delays, just that disagreement. And investors, usually as traders, we don't like uncertainty because it causes a lot more volatility in the markets, and it could also slow down the progress on these important policies like the tax cuts, border security, etc. Continuing down, we're looking at more of and trying to understand more of the market, global market reactions. So foreign investors who are looking at the US economy, who are looking into investments into the US dollar or US companies or equities, they're also watching this situation very closely. So if the US government appears to be unstable, or there's risk of defaulting on debt, for example, it could lead to a weakening of the US dollar, a sell-off in US equities, stocks, bonds, and investors are going to start flocking more towards safer assets like gold or yen or some of those safer currencies. So that's a quick summary on the macro side when you're looking at the Asian markets, when you're looking at the Fed, when you're looking at what are we expecting in the coming weeks for Trump. Now, moving on to the economic calendar, we start off quite easy. We have an Italian bank holiday as well. And then continuing down onto Monday, so tomorrow is the first New York session of the week. It is also the first week of this new month, so it is NFP week. Our main focus this week is going to be mostly on the employment data, along with following the macro fundamentals that we just went over. So going into Monday, as you can see, quite easy, a lot of yellow folders, a little bit of orange here and there, but the things start to pick up more on Tuesday, where there's JOLTS job openings that's coming out around 7 a.m. PST or 10 a.m. Eastern time. So that's really when things start to pick up a bit more when it comes to the economic data, when it comes to the US equities and the US dollar. And then continuing down, you have CPI data coming out from Australia. So if you're trading the Aussie dollar, that is something that you want to pay attention to. Going into Wednesday, you have ADP non-farm employment change coming out, unemployment claim data as well, and then FOMC meeting minutes. So we're expecting a lot more volatility on Wednesday. And then going into Thursday, you have the challenger job cuts as well. So another employment data right before NFP. And this is NFP week. So on Friday, that's going to be the main day. And we're expecting some more volatility as we get closer to Friday. So not on Friday, but as we get closer to Friday. Because usually what we have been seeing the last couple of months is that on NFP week, a lot of the movement tends to happen in anticipation or market sentiment of what are we expecting on Friday. And then when the news is released on Friday, unless the numbers are completely off or there's a huge divergence, we don't really see a massive reaction as soon as the data comes out, especially with the New York Stock Exchange open. But when the data does come out, we're expecting movements happening on the 15 or 30-minute timeframes. So that's what we're expecting this week. Quite easy, but main focus being on the employment side. Let's go ahead and move over to the technical side. We're going to start off with US30. Let's hop up to the monthly time frame. So on the monthly time frame, we have a new monthly candle that's forming here. Last year, we closed off with price pushing back down right back into these support areas. We made a little bit of a bottom wick right here. And then now we're seeing that this month we already made a little bit of a bottom wick and we're pushing up back above these areas. So what I'm going to do is instead of marking off the bottom wick, I'm going to mark off the candle body lows right here, because that is where that candle closed last month. This is where we started forming this new candle, and see if we can continue pushing back up bullish because of that short-term strength that we have been seeing in the dollar and within the equities itself too. So let's say 42,600. If price continues breaking below this, then we're looking for sell-offs to the bottom of this monthly bottom wick candle right here, that bottom wick rejection. And then if price keeps pushing, then we have that top wick rejection to come back and fill. So right now we're sitting at a very crucial level. We do want to be a little bit more careful. Let's come on to the weekly. We start to see that we're still in that bullish structure overall. Nothing has really changed here. We haven't broken structure either. If you want, you can end up, instead of doing the line, you can also do a zone. So then you have this entire area right here that we're sitting in. So when you drop down to lower time frames, because this is the weekly time frame, we're looking at more of the swing trades. But as we drop down to lower time frames, there are opportunities for scalps and even day trade opportunities. And so as you drop down to lower time frames, you can definitely trade this here, but understand the limitation of your trade. On the weekly time frame, we have this entire support. We have been pushing down. We start to see that the liquidity dries down here. We're tapping into this area multiple times. We just end up closing above it. So as long as we can maintain above this area, we're looking for buys to come back up into this 43,100 mark, and then a continuation up from there. If price just kind of hangs around here, we're just waiting for some more fundamentals to come out, more macro fundamentals to come out, more economic data, and then we're looking for a move in one direction or another. Swing sell opportunities are going to be below this 42,600 mark to come back into these bottom wick rejections, into these support areas. But other than that, we're just looking for some quick short-term trade opportunities. You come onto the daily time frame and we start to see that there was a massive sell-off after a consolidation here. A huge push down, we come back down into these areas. We end up just respecting these previous consolidation levels as well, right here, and then push back up. The last daily candle ended up closing above this 42,600. What we want to see is, can we make a bottom wick rejection, break the previous daily highs? If that happens, you have this entire range to come back up into these areas for buying opportunities. As you can see previously to the left, anytime price rejects this and we hold on to it as support, price has been pushing back up, and that's kind of the area that we're sitting at the moment. So that tells me that this zone here is also a liquidity area, because once we clear above it, there's a ton of volume to the upside. So can we follow that volume? That's essentially the wave that we're going to ride here. You come onto the 4-hour time frame, you have some more consolidation, finally a push back up. We come back and revisit into these previous consolidations here to the left, simply to reject it and then push right back up above these areas. We have respected this area as support. You have a little bit of a break and retest here again, and then price pushing right back above this area as well. Last 4-hour candle closing right at that level with the top wick rejection. I want to see this new 4-hour candle flipping and then push back up, but we do want to be a little bit more careful because this is a first session of the week. So I would personally want to wait until the New York session and make sure that we can break above these previous areas and push back up. So I'm looking at a range of around, let's say 42,800. Break above that, we're looking for buys above this. If you're looking for any selling opportunities, now that we have dropped down to lower timeframes and you're looking for quick scalps or even, let's say, day trade opportunities, the safest bet is as price breaks below this area here. That's the previous area of resistance, break and retest, price pushes back up. You have a break and retest here, price pushes, but then we start to consolidate out here. That's more like a retest. So if you were to mark up this level, kind of understand what has price been doing here. It rejected this area. It did consolidate, but it has been creating new highs and new lows. And then price pushes back up. We finally break above that area and then comes back, retests into that area. We're not breaking any previous lows here either. So we want to make sure that price can keep pushing past this. So if price clears above this area of 42,800, then you have those clean buy opportunities to come back up into this almost 43,000 mark. That's what we're watching out for and making sure that we're not getting stuck in any sort of fake outs. If you're looking for any sell opportunities, quick sells are below this level and then a continuation down into that 42,600 mark. Now coming on to GBP, JPY, start off with the monthly. On the monthly time frame, we are consolidating quite a bit, so we know that once price does break out of this consolidation, there's going to be a ton of volume and massive movements that we're going to take advantage of. So you have that 196,600 mark, which is that resistance right here. So as you can see, for the past almost 4 months, we have been consolidating into that area. And then we also have a support being formed down here, but instead of marking this off, I'm going to mark off that bottom wick rejection on the current monthly candle, because if price can continue breaking past this, then we know that we have those clean sell opportunities to come back down into this previous support, and that's going to be a lot of momentum to the downside. So we have that 194,300 mark here. And as we continue pushing this on lower time frames, we're going to have some short-term trade opportunities to fill this entire wick as well, if it is going to continue pushing back down bearish. But on the fundamental side, as we saw that if we start to see a weaker yen, we're going to expect GBP JPY to continue pushing up bullish, and you have those buy opportunities to the upside. Come on to the weekly time frame. We're maintaining a bullish structure here. The structure has not been broken. And at each of these points, similar to USD JPY, price is coming back into these previous consolidation areas simply to collect liquidity and then push back up. How do you know it's liquidity? Once price exits that area, there's a ton of volume to the upside. We have been consolidating into this area multiple times as well. So as soon as price respected that area support, it was a push to come back into these previous resistance areas here. So as long as we can maintain above this 194,300, we have some good trading opportunities, even within this range, if you're looking for day trades or scalps. If price breaks above that 196,600 mark, then we have that buying opportunity, at least to come back and tap into this previous resistance, and then to the upside north of 200. Let's drop down to the daily time frame, and we are respecting a support here on the daily. You have a little bit of a bottom wick rejection here. Price is pushing back up. If you're looking for any short-term buy opportunities, what you want to wait for is price to clear all of this. Top wick rejections, bottom wick rejection, bottom wick rejection. So you have a pretty good range of over 74 pips that you can trade here, and then a continuation up from there. So this could turn your scalp or your day trade into a swing trade opportunity as long as we maintain above 196,600. And if you're looking for any sell opportunities, you wait for price to reject this and then push back down. But based off of these higher time frame structures, we're still quite bullish here. 4-hour time frame, all of this was consolidation. You got the first candle close outside of that consolidation, this new one with the bottom wick and pushing back up. So again, it's the first session of the week. You want to give it some time. It's only the Asian session of the week. And then you also have the first London session, and then you're going to have the first New York session. So you want to make sure you're giving price enough room to make any top wick, bottom wick rejections as it needs to, as the new weekly candle is forming, and not getting stuck in any sort of fake outs as well. Drop down to the 1-hour time frame, same thing. You had all that consolidation, price finally broke above it, retested that area, continued making a new high. You got a doji close here on the last hourly candle with a massive bottom wick rejection, but this new candle just to the upside with no bottom wick whatsoever. So that tells you that there's a lot of bullish momentum here. But again, there's a ton of fundamentals that we just went over that the market is still trying to price in. So you want to be a little bit more patient. If you're trading Euro JPY or USD JPY, it's quite similar to whatever has happened here on GBP JPY as well, but we'll still go over USD JPY. And then on the monthly time frame, you have that top wick rejection here as well, which is sitting right at that resistance level previously. And then you have that at, let's say, 157.900. Price breaks above that, you have those clean buy opportunities to the upside here. And then you also have this bottom wick rejection here on the monthly candle as well. So let's say that's your 156.600 mark. Anything in between, we're looking for short-term scalps or buy or day trade opportunities. And then that's our range at the moment. If price breaks above 157.900, we know there's a ton of volume to the upside. If price breaks below 156.600, then we know that there's a ton of seller's pressure to the downside. But as of right now, this is the limitation of our trade. You come onto the weekly time frame, overall still quite bullish momentum to the upside. We had some nice corrective moves happening last year, held on to some support areas. Historically, that's the area that we have rejected, but once we break past it or break below it, there's a ton of volume to the upside or to the downside. After that, we've had some healthy corrective moves. We tapped into a new high here. It's historically a low consolidation area, and then we wait for price to break out of it as well. And then as of right now, this week just started forming. We're still quite bullish here. So if you're looking for any short-term sell opportunities, you're going to wait for this weekly candle here to flip. And as it flips below that 157.200, you have those sell opportunities to come back and fill the previous weekly's bottom wick rejection coming into 156.600. For any buy opportunities, we have that. As long as we maintain above this area, we have those buy opportunities to the upside as well. Come on to the daily time frame, you start to see a little bit of consolidation that starts to form here. So we had a little bit of break and retest, price finally broke past it, created a new high. We come back, and this is entirely a consolidation that's forming on the daily time frame. So all of this right here. We know that once price breaks past one of these levels, there's going to be a ton of volume to the upside or to the downside. So what we're going to do now as we drop down to lower time frames is understand what's the limitation of our trade and only take scalps or day trades as price is respecting these levels. So let's say on the daily time frame, what I'm going to do is mark off this resistance here, and then any buying opportunities are above this. Anything right here is quick scalps. If price breaks past this, I can turn scalps into day trades and even swing trades. If this candle flips with that top wick rejection, then we're looking for sells only below this and then a continuation down. Come on to the 4-hour time frame. We're kind of respecting this area here as support, but as you can see, a lot of top wick, bottom wick rejections, a lot of previous highs and lows being broken, a lot of consolidation. So this is why we want to be extra careful. I would not be touching USD JPY until the New York session potentially, and even going into the rest of the week. So you want to be more careful here on USD JPY. Again, any buys above that, any sells below this level here, and continuation down. We're going to close off with gold. On the monthly time frame, massive bullish momentum to the upside once we broke past all of this consolidation for many months, almost 2 years here actually. A ton of bullish volume to the upside, tapping into those all-time highs. This month, we already have a top wick rejection and price holding onto a support right here. So you have that at 26.22, let's say 900. And then you also have that top wick rejection right here at that 26.65, 800. That's our range until price can break past one of these levels. You come onto the weekly time frame. What you have is price holding onto a resistance here, which previously was a support. So if we're looking for any buy opportunities, we're looking for buys to come back into this level. That's going to be your quick, day trade or your quick swing trade opportunities for a day or two. And then if you're looking for a longer term trade, then you look for buys all the way up here. So this is where you can start looking for scaling opportunities. Or if you want a safer swing trade opportunity, then you wait for price to break past that and then to the upside. Come on to the daily time frame. So this is where you start to see that consolidation here. We come back into that area, a little bit more consolidation. We're still maintaining a bullish structure here, as you can see. So we're still creating those higher highs and higher lows, even within that consolidation. The last daily candle rejected that with the top wick rejection. We come back down here. So now I'm going to start marking up my levels for any short-term buys or sell opportunities. So any of my sells are going to be below this 2638.3 mark. sells below that as this daily candle here flips back down bearish with the top wick rejection. Anything here is just a quick scalp opportunity, potentially even day trade, depending on how long it takes to play out. And then if I'm looking for swing sell opportunities, it's below that 2638.3 to the downside of 2622.9. For any buy opportunities above that zone and to the upside. And we're just using whatever has happened historically here to the left as our reference. We have been seeing a lot of consolidation here. So we know that this is just going to be the limitation of our trade unless we have enough fundamentals to finally break past this area. You come onto the 4-hour time frame, we've had a nice corrective move. It seems like we're holding on to a support. We haven't broken the previous 4-hour highs here, so still we're just giving it some more time to make any highs and lows as it wants to. It is the first trading day candle for the week as well. So again, we want to be extra careful here. So that's pretty much it. Any buys above that level, anything below is sells. That's pretty much it for this week's weekly outlook. In the upcoming weekend on January 11th and 12th, I will be hosting the first Forex trading bootcamp for the year. So that is where I'm going to teach you all these strategies. We're going to do the entire top-down analysis. We're going to study the candlestick anatomies. I'm going to teach you all the price action trading strategies that I teach my students in the mentorship program and that you have seen me do in the live sessions here on YouTube, whether simulation sessions or actually trading sessions as well. We're going to go over the entire fundamental analysis. How do you actually break down these fundamentals yourself, understanding all the major fundamentals. And then I'm also going to teach you some risk management strategies. So make sure that if you guys have not, you sign up through it on the SharmaFX.com website. I only have 15 spots available for this Forex bootcamp, and we only have around 11 spots available now. We've already had 4 students sign up. So make sure that you guys sign up before the space runs out, and I will see you guys next week for the next weekly outlook.